Uncle Powie. Uncle Pow. Uncle Chirpow, you know. Shout out to everybody here. It's been a while. It's been a couple months since we've done this. I skipped the last one, which is sad, right? Only 12 a year. It was that serious, I guess, huh? But shout out to everybody here on the live. Thank you for jumping on in. Appreciate each and every one of you for being here, sharing your most precious asset with me, and that is your time. Is this your first time being here on a Fed decision? Let me know. We're going to break it down. We're going to talk about it. We're going to look at the charts. What we do here is we're going to look at the 1 minute chart. Sometimes we go to the 32nd to the 5, depending on the charts. We also have BOOKMAP up and running on the side, and we're going to show you the volatility. If you were just with me, I made a long at the end of the live stream. Remember that? Let's take a look at that for fun on the perpetual. But I made this long. Let's take a look here. And you can see, boom, we hit the line. I was just going over all my wins. And boom, there it was again. Bang, to the upside. We were waiting for the push, and we got the pop to the upside. Shout out to anyone that did take that trade. All you wanted was the length of the base of the triangle for the mini move. And that's exactly what the TA gave us, the base, right? So, hey, you can't beat that. It is what it is. Shout out to everybody here. Let me make sure that the audio's on and everything is right and ready for Jerpow, baby. Shout out to all my lovers of live. Shout out to everybody here on the live stream. Thank you for jumping on in. 228 people on the live as we get ready for the 2:30 Jerome Powell. No rate hike. We already know there's going to be no rate hike. We don't really have to sit there and like, what is the hike going to be? You know what I mean? We know they're not going to raise the rates. We already know that. All right. We'll go from there. This trade's an older trade. It's still up 52%, 270. We are aiming to make this turn in. I want to turn this into a couple grand at least, but it's going to take a while. All right. It's going to take a while. The upper limit of the Fed's rate hike is in. All right. And I like how MEXC always gives you the skinny and gives you the information, right? And MEXC lowered their fees again, everybody. I think you should be pleasantly surprised. You know, backed by popular demand, low fees. All right. 0 spot maker and taker fee again. 0 future maker fee and 0 1% taker fee. You don't even have to hold the MEXC token to do so. Well, my guess is maybe not enough people held the MEXC token. They were trying to get people to hold MEXC tokens, and then when not enough people bought MEXC token, maybe they're, I don't know. I'm gonna talk to them. They didn't even tell me. I didn't know. I hit up my rep today. I said, dude, you guys are lowering the fees. It's lower commissions definitely for all the KOLs and everybody out there, right? But it is what it is. And that's why you don't stick to only making your gains off an exchange. Straight up. That's why you have to have your own products if you're out here. You have to believe in yourself. You got to have your own business, right? It's cool to get sponsorships. It's cool to get other, you know, but you always want to make sure you're maintaining your own sense of business, baby, right? So you could be your own businessman. Very similar to like a politician that doesn't have to accept donations. You don't want to have to take money from other people. Look at this. Sorry, I'm a little lower today because I want some room for Jerpow. All right. He's going to be right here speaking at 2:30. We're going to break it down in 26 minutes. Shout out to the 426 beautiful souls. We can do an AMA real quick while we're sitting here. Ask me anything. Let me pop up the chat here. Make sure as long as it's not like, you know. But ask me anything. You want to have the burger, not just the ketchup. Shout out to Jamie. I love you, Jamie, man. I would not want to do what we're going to do in the next 4 to 5 years with anybody else, man. I can't wait to meet you in person. I can't believe we've done so much and never got to meet in person, but I love you, man. I appreciate it. Sam, look at any minor. What made you become a Muslim? What a question. Honestly, my wife, you know, my wife is Muslim. She's Afghan. And it's a long story. That's a long story. I don't know if I can answer that today. Any trades? Yeah, I don't want to get into that one. But, you know, I'll be honest. You know, I don't want to get into it because some people will judge me for it. And I might hurt some people's feelings. And I actually just made a really smart decision here. I grew up Catholic with the fight in Irish. Amen. So did I, baby. Boston. You have coffee today. The energy yesterday was great. Keep doing it. I know, right? Thank you. Babe, I think I need it. Can I have a cup of coffee, babe? Just a little one. But could I have a small cup of coffee? What? Thank you so much, my love. Nah, take your nap. Forget my coffee. No. I didn't know. I messed up big time right there. Yo, you guys just learned a valuable lesson. Don't ask your pregnant wife for a cup of coffee, all right? Because she might just be taking a nap, and you messed up. And if she doesn't take that nap, it's on you, and you messed up. And you will pay. You will pay dearly. You will pay with your life. Just make it hot and black this time. Yo, Burke, man, I love you, man. You get it. Oh, man. A lot of you know what's funny? A lot of the people that I've met through the algorithm and through YouTube and through the, you know, they're like a mirror version. You know, they're not just like, we're very different people, but we have so many of the same frequency attitudes, you know, things that like just fit, you know, the way things someone will say or how someone will act or like the moment they get into a certain situation. And just by the way you say it, I'm like, man, this is so funny, you know. Certain people get you. You ever meet someone, they get you immediately. Like you meet someone, it's just like, then you meet someone, they never get you no matter what. You've tried so hard. No matter, you and that person will never seem to get along. It just, even if you get along, it just, there's no connection there. There's just nothing there. You ever have a neighbor or someone in that you had to see a lot and you tried, you were like, one day you even opened up and said something and they just were like, yeah. And it was just, you couldn't get anything out of them. Like they didn't give it to you, so you couldn't, you know. See, I'm multisocial, so when I'm around someone, I'm going to be like attacking them socially in a good way, but I'm going to be asking them questions, I'm going to be looking for things, right? And I'm going to be able to pull out because I'm going to be asking, you know, just doing so much, you know, no. And the person's going to be like, they have to react to me, right? I'm going to make them react. And then I can kind of get a feeling of the reaction and then get a feeling of what's going on, right? What did you have for lunch out? I had a omelet with cheddar cheese, mushrooms, onions, and peppers. Is it in my teeth? And, yeah. And a green tea with lemon in it. Yeah, that's exactly what I had. No lie. A little bit of ketchup. And I ate half of my potatoes with onions. And I ate all of my sourdough toast. I had sourdough toast as well. A Philly omelet. Very nice. Yeah, it was big and chunky too. My wife had eggs Benedict with avocado and spinach. Spinach and avocado Benny. Funny, this 1 minute time frame here looks a lot like Bitcoin's on, like, look, I just want to do something real quick. This will blow our minds. This is what I love about the charts. And this is why I think the charts are so interesting and there's so much to learn at any given moment in time. They just moved something on me. I gotta find. I forget. I didn't use it enough, and I forget where they put it. So I took this, and I just felt like, and I could be wrong, but they just kind of, I don't know, there was a resemblance, in my humble opinion, to the two patterns. See what I'm saying? I don't know, I just saw like the uncanny resemblance. That was all. That's it. That's all I had to say. But you know, that's how my mind works. Like I could see something on the daily and then I'm like, hey, wait, that like, I'm seeing the same thing when I'm seeing on the 1 minute chart. I find that pretty fascinating. Anyway, so that kind of blew my mind, really, to be honest. I'm just like, wait, what just happened? What did he just do? So let's look at here at 43,915, right? That's our target for this falling wedge. That would be the leg up. That's this algorithmic move here. That's so nice of you. You didn't have to do such a thing. I'm so sorry to ever get in the way of a nap. I love you. I'll never say no to you. Come here, give me a hug and let's show people how it is to be in love. You're so sweet. Thank you so much for everything. Carrying my third child. I'm so lucky. I'm sorry that you had to go through all the sickness and all the pain. That's a great cup of coffee, babe. Wow. Doesn't get better than that one. Okay, we're ready for Jer Powell. We're going to kick it into high gear with Jer P. Jer PP. Sorry. It's just, you know, the guy's funny, man. What color tie is he going to wear today? Has anyone seen it? What color tie? He usually wears that, like, off blue teal. I think he'll be in a teal, off blue teal. He should be in the red tie, the power tie, but he doesn't do that. He always plays it soft. It's like a blue or a gray or teal. I'm going for that teal gray, you know what I mean? I think you know what I'm saying. He's worn it a few times. I'm going for that one. But we'll see. We shall see. What if he came out just wearing a really fruity outfit, man? Like one of mine, you know, with like the flowers and just... I mean, he just was dead serious. Like, today, the Fed is, and he just came out in like a yellow tie. Like, it would be the talk of the town. It would get so much hits. People would be like, look at the outfit on Jer Powell. Like, why did he dress like... Isn't that funny how much a stir it would create? So that just shows you how conservative society really is, right? Because if he came out, 43,900 is that target. Bigger area could take us all the way to 44,000. The liquidity for Bitcoin suggests, you know, right when the Fed meeting started to come out, this liquidity built up at around 1 o'clock, and they started to build more. And now we have a lot of liquidity up at 44.5. We didn't have this at the beginning on the live stream, right? This wasn't, we had it here. That's all we had. They did not bring us this high. So it's interesting. Very, very interesting. Now they got the lows down here at 42,000. We're holding 43.4 right now pretty nicely for Bitcoin. All right. And shout out to anyone that took the trade with us today. Amazing. We've been basically, you know, we took this pump and we basically been kind of just, you know, chop city ever since. Got above a nice resistance. And we could go over the big stuff for all day long, but I'm excited. I'm excited. I'm just amazed at all the ways we were able to nail these trades the last few days. Just haven't missed a pump for Bitcoin. It's just unreal. Like every little green pump you see, we basically nailed. Pretty insane. And today was all about, you know, how I made the trade today. Very simple, everybody. Go to TradingView. You can go up here to MA and type in MA. And hit moving average simple. Click on that. And then you'll see it'll be the 9. It'll just be a default to the 9. Click on it. Inputs, and you'll turn your input. I have a 5 one. This is all 5. Yours will just have 1. And turn it to the 200. And if I can turn these off, it will look just like this. Okay. And just use this 200 SMA to make gains all day long. All right. Whenever you lose it, begin to short a previous resistance or short the actual line itself. That would have been a massive win. It doesn't help you with these reversals and when to get out, stuff like that, right? That's where divergence is, support and resistance, and you got to have it's not the whole shebang. It's a part of this. It's a beautiful entry point. And so today, what happened was, let me show you. And again, if you get the full blown trading view, you'll be able to use the replay tool, and that's just so cool. And so we go back in time to the 1 hour time frame, and you can see that stochastics were low and pointing up. MACD had this beautiful curve. And when I kept showing people, look, swing up to swing up, while this is swinging down, which was hidden bullish divergence. Most of the time, you do get a pretty nice move to the upside. Bitcoin getting a little bit of a dump. Finally, hasn't been this low in a few hours. All the way back down to 43,300. All right. And we're toying with this 200 SMA. And again, here we had swing up to swing up. Well, this did a swing down. If you go look at it and zoom in on the RSI, it's a downtrend. And what it told me, we just don't need that we have hidden bullish divergence still right now on the 4 hour time frame. Still. Which suggests it will break this high. You know, no matter how scary it looks or what happens or how much fear you fear, because your emotions are going to go crazy in this place. That's what I love about this indicator. I get in it, I walk away. 9 out of 10 times I come back, I'm a smiling man. But again, you're going to learn this. Hidden bullish divergence. So once I saw that, I told me, okay, we're going to be able to get above the 200 SMA. And I front run the idea, right? So we came here, and when we were right here, I front run the idea that this would break above it. And we did get the break above, right? Because once you close a candle above it, and usually a lot more pumping should come out of this. So I'm expecting at least this measured move then for this breakout. You know, I'll go from there and find, you know, but I'm expecting at least about $45,000 because we have hidden bullish divergence, a falling wedge that breaks up. That's also the measured move with a falling wedge and 1, 2, 3 Elliott wave theory. Boom. I don't study it for a living. I just, you know, that should be the third wave in this smaller section of waves. And the stochastics are turning up, so it tells me that there's a bullish sign for Bitcoin. Anything is possible. This could be completely defied. These are probabilities. Everything I show you is a probability, not a mathematical certainty. Heck, nothing on this earth is a mathematical certainty. Everything here is a probability that we do. It's a probability that me and you will be alive tomorrow. There's a high probability, but it's not 100%. Sad to say. You know, it's the weirdest thing to say to everybody, but it's not 100%, right? So now you have to look at this as like, look, you have the rising wedge bearish div that broke down. You did come down here. You're going to come down to this 200 SMA on the 7-minute time frame. And you lost, see, the point of control? You got to gap back down to here. You can see that's a smart place to take some profits if I was in a short, because you can see this is where the VRVP starts. You have the gap here. You're coming down to that 200 SMA very late. Unless you wick up immediately and this is some type of cash grab, it's likely you're going to continue down to 43,057. All right. Now the rate hike is in. We know there's no rate hike. Okay. That's like that. We know that. Bang. 96.9% no rate hike. Current day, bang, bang, bang. Okay. Next meeting will be in 48 days. We get it. It's kind of nice. Not 30 days, 48. We get a little bit of a break here. The longer, the better. All right. That's why February does better too. The closer you have these meetings, right? Because then you have to do you remember the bear market? It was one thing after another, and then we'd have a meeting. It was vicious. It was absolutely vicious. All right. Nasty short to the downside for Bitcoin. There was a great bearish divergence there. Swing down to swing down. While that was swinging to the upside, right? I'm going to slap on my moving averages again. Now, if we break that 200 SMA on the 7, could be a good short. I wouldn't go after any shorts or longs. I usually wait 2 to 3 hours for the market to settle. And then I come back to the trading group and start posting charts, looking at things. But I wait a bit. You would expect volatility today. Look, in a fast move up, when you move that fast to the upside of the 7-minute time frame, then funkily consolidate for such a long time here. All right. Be very likely we're going to touch this 200 SMA. Very likely, right? And remember, this is like an hour before is like, I usually never trade Fed day. I can't believe it. You know what it is though? I'm getting so in the zone of my trading style that I do whatever my style tells me to do no matter what day it is. If I see the setup that I've been looking at my whole life staring at me in the face, I gotta take the setup. See, what will happen to you is when you start to trade, you're like, I'm gonna open up a trade today because you got these feelings, right? And you get your butt whipped. You sometimes win. You sometimes lose. You go through it all, right? Thousands of trades go by. If you're lucky, you trade thousands of... If you're lucky, you get to trade thousands of trades like I did, right? Whether you win or lose, you keep coming back and losing, whatever it is, or you win some, you lose some, you break even. However you get to get the information of the, 10,000 trades, once you have all those trades in, you now eventually have subconscious mind theory working for you. You've now given so much of the charts to your subconscious mind that they're going to work for you a little bit. And while you're dreaming, while you're thinking, while you're doing stuff, you're going to be replaying 200 SMAs. You're going to be seeing the subconscious mind. What it does really, it replays a lot and categorizes for you all the time. You can't even feel it or see it, even while you're sleeping. So the more things you give it, so if you sit there and watch, violent episodes of garbage TV, 2 to 3 hours a night, Think about that. Compile all that data after 2 to 3 years, 5 years, and that's what your subconscious mind's sitting on. And so now if you do this all the time like I'm doing, then this is, so now wouldn't you want your subconscious mind to work for you and make gains for you? Your subconscious mind is a beautiful thing if you can get it to work for you. You'll never know what it's doing, but you got to program it. It's very similar to a computer. If you program it correctly, it'll begin to pay you when you don't even know. That's what the beauty of TA. I'm giving you guys a deep secret right now. So if you can sit here and continue to give yourself the charts, even days when you're bored, even days when you feel like you shouldn't, even days when you're like, what am I listening to this guy yap for? Or whatever channel you're on, as long as you're taking in the technical analysis and go by yourself. Backtest, use a demo account. See how many trades you can rack up, right? 100 trades. How many did I win? How many did I lose? Get some data behind you. All you need to do is be 30% to win, man. People think this is way harder than it is, but they just don't know how to start and do it properly. They refuse to do it the right way. They want to make it hard. They want to make it hard. They want to make it hard. They want to make it real hard too. Not just slightly difficult. Like they want to make it so hard that they get emotionally frustrated by it and then go back to their old ways of whatever they used to do and begin to fail. Like get into that failure mentality, negative self-talk. Every time I open up a trade, it goes down. You ever hear people say, who hears people say that? Oh, if you want something to go up, just tell me to sell it. It'll go up the second I sell it. If you want something to dump, tell me to buy it. I'll buy it for you guys. It'll dump immediately, Every time I buy something, it goes down. Whenever I hear that, right, I go, of course. And why? Because I'm like, well, the person that said that believes that. And if they believe it, then that's what's going to happen. So, of course, every time they buy, it goes down because they're, number one, they have a scarcity mindset, right? Like they're building the idea that it's going to go down on them before it's even gone down on them. This bat's never going to hit a ball and then stepping up to the plate. This bat just sucks. It's just never going to hit a ball. This bat's horrible. It's like, well, what do you think is going to happen then? You'd be lucky if that thing ever hits a ball, right? Same idea, same thought process in my mind to anything you do in life. It does not matter what it is. Can the 7-minute bounce, look, take a wick. I take wick to wick here. My man friend would take that candle body, almost 786 retracement. Never broke the 200. Now, if you break the 200 SMA, we're going down south. Even the 7-minute, think about it. Last time we did, look, huge dump down. Pretty nasty dump down. Little mini dumps because the trend. But look at this one. Get above it, huge pump up. You could pick whatever time frame you want to do this on. You just got to be consistent about how you do it. And believe. You got to believe in yourself. You got to believe in in your data. To me, the only reason I go live every day and feel great about it, like today's Wednesday. Monday, we came out, we nailed the charts. We had a beautiful Monday. Like, I put out live trades, we hit every trade. It was unreal. Same thing happened on Tuesday. Same thing happened today. 3 days straight, and even the weekend was crazy. Saturday night, we hit a trade. It's just been Friday night, Thursday. The last few weeks, it's been amazing. Why? Well, it's just because I just do the same thing. That's all. It's not rocket science. I just do the same thing over and over again. Just stay inside the pocket. Don't overthink it. And don't use your emotions. All right? I'm not a financial advisor. Nothing I say or do should be taken as financial advice. Please get yourself a financial advisor. Do your own due diligence before getting into any project corner trade. My name is Sam Price. I started trading when I was 25 years old, maybe even 24 when I opened up my first trading account, but I had no idea what I was doing. I didn't really know what technical analysis was. I never heard about it. I didn't understand any of that stuff. I was on a boat with some kid. He said the word Fibonacci's. He's like, I was doing the Fibonacci's. I was working for, and I was like, what? He's doing the Fibonacci. I thought it was a dance. That'll get you off your feet. Sorry, a little loud in the ears. I'll make it a little lower next time. Like, there we go. But, lo and behold, did I know that Fibonacci would become my life? Like, these would be the rules of my life, right? Funny, I think about that day now, that day when I was on a sailboat with a buddy, And we had all grown up together. It had been years. He had moved to Chicago. The kid I'm talking about, named Teddy, and I was with my buddy Mac. And Teddy was like, yeah, I'm at the Mercantile. I'm working at the Exchange in Chicago. And he's like, I'm doing the Fibonacci's, you know? And I was like, what the? I think I kind of act like I knew it. I was like, yeah. I got like half read about it. But yeah, the fibs, yeah. It's funny. Look, that's a hidden bullish divergence. See? That tells us we should get a break to the upside, and we should break a high above the high. Even though I know it's Fed day, even though I know it's crazy, it's a hidden bullish div. Looks better when you take away the moving averages. And I just love that clean move. You have your low, and I don't use the wicks when using any type of divergences. Only use candle bodies when using divergences. Okay? I use wicks with Fibonacci, but not with divergence. Look at this. The shoulder, the head, and the right shoulder this morning was the way to start this trade too. Just seeing that right shoulder, it's just so beautiful how it does what it does. Price action just follows these lines of just absolute beautifulness. One thing I will tell you, smaller time frame hidden bullish could be negated less than once I see it on like the 4 hour or the 8 hour above, then it's like it's really like falling out of the falling wedge, right? Straight down now. I got to go to a smaller time frame. And here we go. Fed meeting's coming up, baby. So when the Fed meeting's up, we're going to pull away this chart, make it smaller like so. Watch Bitcoin on the very small time frame, like the 30-second chart here. And we'll be watching it as it moves. We'll also have BOOKMAP up on the side here to see the liquidations and what's happening. All we really need is just that bit there. And then Jerome will be in the middle. And I will be off here to the side. All right. And I even make myself a little smaller. Because for once, it's not all about me. It's about your pal, man. All right. Excellent. And then I'm ready. Whales did get a little push. I figured it would. Dipped in a little push. But Whales market looks interesting. And we're getting very close to the Fed meeting. About 1 minute left till Fed time, baby. 1 minute left. Can you feel it? Who here can feel it? Just wanted to check. Are we going to watch Powell's speech live here? If you want to learn and read the charts, the TA Lifer does is hands down the best. Shout out to Abel Matthew. Thank you for saying that. Thank you for saying that. Many people say that. I really appreciate it. Liver's the best teacher of TA on YouTube. Some others are good, like Scotty Carney, Mitch Ray, but they use more harmonic patterns. TA. Mitch didn't tell Cores either, just does TA. Mitch is the man. I used to watch Mitch and believe that maybe one day I could do technical analysis live on YouTube. Like, he was the live stream that I first saw one day and was like, wow, like, I saw people throwing him money. I saw that he lowered, like, he had to hire his, like, he had to, like, raise his super chats to, like, $10 only. Let's get the super chat train going, Sam. Again, thanks for all the hard work and spreading the love. Shout out to Killer Country Music. God bless you for being here, man. Thank you so much. It's your pal party. And here we come. It's 2:30. He's about to show up. Uncle Powell. Everybody, need I present to you Mr. Jordan Powell. I'm messing with you. Mr. Jerome Powellium. There's their music. They're usually a little late. It's 2:30. We'll see what happens here with the FOMC. 808 people here on the live. Let's get those likes up to the watchers so we can bring the watchers up on this thing. Let's have some fun. He's taking a shot of whiskey right now. He's telling someone to close the effing door. He's like, close the door, man. That was hilarious. You have to, I mean, that was beautiful. Pineapple, upside down Bitcoin. You're funny, man. Who said that? Other traders are good, but you can play But you call every play every day, man. I don't know how. That's crazy, right? Thank you for saying that. That's very nice of you to say. I don't get every play. I miss some things. Sam, I'm learning so much of the trading group. I got wrecked a couple of times, but it's part of the learning process. Okay. He's waiting for ChatGPT to finish the script. Yeah, why is Jer Powell late? Best answer. Why is Jer Powell late? Tell me why he's late today. What do you guys think's happening? 42K incoming. Press live. He's live. He's live. He's live. He's live.
Moving into better balance. I will have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has been expanding at a solid pace. GDP growth in the fourth quarter of last year came in at 3.3%. For 2023 as a whole, GDP expanded at 3.1%, bolstered by strong consumer demand as well as improving supply conditions. Activity in the housing sector was subdued over the past year, largely reflecting high mortgage rates.
Dump it right now.
High interest rates also appear to have been weighing on business fixed investment. The labor market remains tight, but supply and demand conditions continue to come into better balance. Over the past 3 months, payroll job gains averaged 165,000 jobs per month, a pace that is well below that seen a year ago, but still strong. The unemployment rate remains low at 3.7%. Strong job creation has been accompanied by an increase in the supply of workers. The labor force participation rate has moved up on balance over the past year, particularly for individuals aged 25 to 54 years, and immigration has returned to pre-pandemic levels. Nominal wage growth has been easing and job vacancies have declined.
He just said immigration
Although
has
the
declined.
jobs to
What is he
workers
talking
gap
about?
has narrowed,
He's out of his mind.
labor demand still exceeds the supply of available workers.
That's not true.
Inflation has eased notably over the past year, but remains above our longer run goal of 2%. Total PCE prices rose 2.6% over the 12 months ending in December.
They will never get to 2%. I told you this.
Excluding the volatile food and energy categories, core PCE prices rose 2.9%. The lower inflation readings over the second half of last year are welcome, but we will need to see continuing evidence to build confidence.
Strong bullish div
that
here on the
inflation is
32nd.
moving down sustainably toward our goal. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We're highly attentive to the risks that high inflation poses to both sides of our mandate, and we're strongly committed to returning inflation to our 2% objective.
They'll never get to 2%. I promise.
Over the past 2 years, we have raised our policy rate by 5.25 percentage points, and we've decreased our securities holdings by more than $1.3 trillion.
They had securities. They were selling securities.
Monetary policy is putting downward pressure on economic activity.
They sold while the market pumped too, so they lost a bunch of money. Doesn't you get it? Crazy.
Activity and inflation. The committee decided percent and to continue the process of significantly reducing our securities holdings. We believe that our policy rate is likely at its peak for this tightening cycle, and
that's how bullish div works.
If the economy evolves broadly as expected, it will likely be appropriate to begin dialing back policy restraint at some point this year. But the economy has surprised forecasters in many ways since the pandemic, and ongoing progress toward our 2% inflation objective is not assured. The economic outlook is uncertain, and we remain highly attentive to inflation risks. We are prepared to maintain the current target range for the federal funds rate for longer, if appropriate. As labor market tightness has eased and progress on inflation has continued, the risks to achieving our employment and inflation goals are moving into better balance. We know that reducing policy restraint too soon or too much could result in a reversal of the progress we've seen on inflation and ultimately require even tighter policy to get inflation back to 2%. At the same time, reducing policy restraint too late or too little could unduly weaken economic activity and employment. In considering any adjustments to the target range for the federal funds rate, the committee will carefully assess the incoming data, the evolving outlook, and the balance of risks. The committee does not expect that it will be
42-3,
appropriate
big
to reduce
resistance.
the target range until it has gained greater confidence that inflation is moving sustainably toward 2%. We will continue to make our decisions meeting by meeting. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-term inflation expectations well anchored. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to our questions.
This was so dovish. He was soft. This is going to be in and out like butter salt.
Thanks for taking our questions.
Colby.
Obviously,
Oh, no,
in
Son-
the
Salama
statement and
Smilek,
just in
right.
your
Colby Smith's
remarks
there.
there, you note that you don't want to cut interest rates without greater confidence that inflation is coming down fully. I wonder, what do you need to see at this point to gain that confidence? And as you make those decisions, how are you weighing recent strong growth in consumer spending data against the sort of solid inflation progress you've been seeing?
Sorry, say that last part again.
How are you weighing the growth data and consumption data, which have been surprisingly strong, against inflation data?
Purple tie.
Okay.
Notice
So
the
what are
purple
we
tie.
looking for to get greater confidence? Let me say that we have confidence.
Notice how wacky is
we're
it
looking
tying
for
a
greater
tie?
confidence that inflation is moving sustainably down to 2%.
See mine?
Implicitly, we do have confidence, and
That's
it has
whack.
been increasing, but we want to get greater confidence. What do we want to see? We want to see more good data. It's not that we're looking for better data. We're looking at continuation of the good data that we've been seeing.
We want to
An
see
example
more
is
good
data,
inflation.
not better data.
So we
This
have
is
6 months of
insane.
good inflation data. The question really is, that 6 months of good inflation data, is it sending us a true signal that we are in fact on a path, a sustainable path down to 2% inflation? That's the question. And the answer will come from some more data that's also good data. It's not that the 6-month data isn't low enough. It is. It's just a question of, can we take that with confidence that we're moving sustainably?
Yo, if
down
I
to
did my
2%?
live stream like that, y'all
That's
would
really
never
what
come
we're
back.
thinking about. In terms of
What's Bitcoin doing? Well, we need the good data, and now we have good, better
we've
data.
had strong growth. I mean, if you take a step back, we've had strong growth, very strong growth last year, going right into the fourth quarter. And yet we've had a very strong labor market, and we've had inflation coming down. So I think, whereas a year ago we were thinking that we needed to see some softening in economic activity, that hasn't been the case. So I think we look at stronger growth. We don't look at it as a problem. I think at this point we want to see strong growth. We want to see a strong labor market. We're not looking for a weaker labor market. We're looking for inflation to continue to come down as it has been coming down for the last 6 months.
To the upside.
And I'm sorry if I could just follow up very quickly. When you say that you want to make sure that it's a true signal, is there anything that you're seeing in the data that makes you doubt that it's a true signal at this stage?
No, I think it's. I would say.
Think.
It seems to be the likely case that we will achieve that confidence, but we have to.
Seems
achieve
like it's
it, and
gonna
we
rain
haven't
today.
yet.
Is it? Who
And
knows?
so, I mean, it's a good story. We have 6 months of good inflation, but you can, and you know this. You can look behind those numbers, and you can see that a lot of it's been coming from goods inflation, for example, and goods inflation running significantly negative. It's a reasonable assumption that over time, goods inflation will flatten out, probably approximate zero. That would mean the services sectors would have to contribute more. So, in other words, what we care about is the aggregate number, not so much the composition, but we just need to see more. That's where we are as a committee. We need to see more evidence that sort of confirms what we think we're seeing and that tells us that we are on, gives us confidence that we're on a path to a sustainable path down to 2% inflation.
So inverted head and shoulders should break up to 43.5, 44. There it
Nick
goes.
Timrose of the Wall Street Journal.
There it goes.
Chair Powell, it seems to me you
Chair
raised
Powell.
rates rapidly
This
over
guy's
the
awesome.
last 2 years for two reasons. One was the risk of a wage price spiral. Two, there were risks of inflation expectations becoming unanchored.
Look at that
This
inverted
morning's
movement.
ECI report for the fourth quarter shows private sector payroll growth running at a sub 4% pace. Inflation expectations are very close to where they were before the inflation emergency of the last 3 years. And given that you appear to have substantially cut off these two tail risks, and that you've judged here today current policy is well into restrictive territory, what good reason is there to keep policy rates above 5%? Are you really going to learn more waiting 6 weeks versus 3 months from now that you have avoided those two risks?
So, as you know, almost every participant on the committee does believe that it will be appropriate to reduce rates. And for partly for the reasons that you say, we feel like inflation is coming down. Growth has been strong. The labor market is strong. What we're trying to do is identify a place where we're really
Remember the word try, I
confident
tell you
about
not to use that
inflation,
word.
get it going back down to 2%.
Stay away
so
from
that we
people
can
that use
then
that word.
begin the process of
Not gonna do
dialing back
nothing.
the restrictive level.
They're going to try to do it.
So overall, I think people do believe, and as you know, the median participant wrote down 3 rate cuts this year. But I think to get to that place where we feel comfortable starting the process, we need some confirmation that inflation is in fact coming down sustainably to 2%.
If I could ask differently, if you hold rates high as inflation moderates, as it has been, target rates will exceed the prescriptions of the Taylor rule or its variants. What would be the reasoning for holding rates higher than the levels recommended by those rules in the current instance?
Well, I think, as you know, we consult a range of Taylor rules and non-Taylor kind of rules. We consult them regularly. They're in our teal book, and they're in all the materials that we look at. But, I don't think we've ever been at a place where we were setting policy by them. And they're, depending on the rule, it will tell you different things. There are many different formulations. Another way to think about it is, implicitly, is so. In theory, of course, real rates go up if holding all else equal as inflation comes down. But that doesn't mean we can mechanically adjust policy as real rates, as inflation comes down. It doesn't mean that at all, because for one thing, we don't know. We look at more than just the Fed funds rate. We look at broadly financial conditions. But in addition, we don't know with great confidence where the neutral rate of interest is at any given time. But that also doesn't mean that we wait around to see the economy turn down, because that would be too late. So we're really in a risk management mode of managing the risk, as I mentioned in my opening remarks, managing the risk that we move too soon and move too late. And I think to move, which is where almost everyone on the committee is in favor of moving rates down this year. But the timing of that is going to be linked to our gaining confidence that inflation is on a sustainable path down to 2%.
Just like,
Howard.
Hi, thanks, Chair Bell. I'd like you to key in on the use of the word in the statement that inflation still remains elevated. You've pledged to cut rates before inflation reached 2%. So that implies that there's some sort of intermediate step here on inflation, and that a cut would be consequent with a change in the statement language that inflation remains elevated. What's the step down from there?
Yeah, I don't know that we've worked out the particular statement language and that kind of thing. I would just say, if you look at where 12-month inflation is, and it's still well above, core is 2.9%, for example, 12 months, which is way down from where it was. Very, very positive development, very fast decline. And the case is likely that it will continue to come down. So that's where it is. But we're wanting to see, more data.
So if I could follow up on that, the statement allows that you want greater confidence on inflation falling before you cut, but it doesn't mention the other side of the mandate, a slide in employment. Would a slide in
Look at that
employment
inverted playing
also,
out perfectly on the right
bring
side
you
of your
to the
screen.
point of cutting rates?
going to that target,
Yeah,
43,
so,
544.
let me say that we're not looking for that. It's not something we're looking for.
You found
But
that bullish
yes, if
dip
you
on the
think about,
30-second chart.
In the base case,
Bang, on the right shoulder.
the economy
Execution.
is performing well. The labor market remains strong. If we saw an unexpected weakening in
Right shoulder.
certainly in the labor market, that would certainly weigh on cutting sooner. Absolutely. And if we saw inflation being stickier or higher or
Stickier.
those sorts
Stickier
of things, we would
inflation.
argue for moving later.
We'll get the jelly
In
if
the
it gets
base case,
sticky.
though, where the economy is healthy and we have, we have ongoing growth, solid growth, we have a strong labor market, we have inflation coming down. That's what people are writing their SEP around. And in that case, what we're saying is, based on that, we think we can and should take advantage of that and be careful as we approach that question of when to begin to dial back restriction.
So we could just run in and cut rates real quick? That's super bullish.
Claire Jones,
Look, we're going to the
Financial
target
Times,
that I just showed you.
circle
Look,
back
and everyone would
to,
say,
the greater confidence aspect of the state.
it's not the TA, but look, I mean, that inverted head and shoulder played out regardless, right? I want you to teach you that the TA is showing you what's going to happen before it happens.
To all needing greater confidence.
I'm trying to show you.
Is the unanimity, or at least consensus among FOMC members, about what the threshold for that greater confidence is? And if not, could you maybe
First call.
tell us a little bit about the
to the
discussion
next
today on, what the variations between FOMC members was on what constitutes enough confidence to cut rates, and also if there was any variation on how quickly that greater confidence threshold could be reached. Thank
So
you.
we're not really at that stage. There was no proposal to cut rates. Some people did, talk about their view of the rate path. I would point you to the SEP.
Got to get about that 200 SMA and hold it.
As good evidence of where people are, although it is one cycle later. So, we're not at a place of really working out those kinds of details because we weren't actively considering, moving the federal funds rate down. I will say there is a wide disparity, a healthy disparity of views, and you see that in public statements in the minutes and the transcripts when they're released every 5 years. So we do have a healthy set of differences, and I think that's actually essential for making good policy. We're also able to reach agreement generally because we listen to each other, we compromise, and even though not everybody loves what we do, they're able to, for the most part, able to join in. To me, that's a well-functioning public institution.
Rachel.
I don't think he ever answered the question, right? He just described what they do.
Hi, Chair Powell, Rachel Siegel from the Washington Post. Thanks for taking our questions.
Rachel, nice hair,
over
Rachel.
the past few years, there have been all these real-time indicators that helped us gain a sharper understanding of where the economy was, like open table data or office attendance. You've talked about vacancies in the past. And I'm wondering at the start of this year, what might be on that dashboard for you that's giving you the clearest picture of the economy, including on rents, if you could touch on that.
Including?
Rent costs.
Yeah. Well, so we're not, it's not the pandemic, so we can actually rely on more traditional forms. People are working, they're getting wages, and the economy is largely reopened and is broadly normalizing, as you see. So I wouldn't say we're looking at that sort of more innovative data as much. You point to rent, so of course we follow the components of inflation very carefully, which would be goods inflation. I talked about that a little bit. You mentioned housing inflation. So the question is, when will these lower market rents find their way into measured rents as measured in PCE inflation? And we think that's coming, and we know it's coming. It's just a question of when and how big it'll be. So, but that's in everyone's forecast, I would say. So that will help. But at the same time, we think goods inflation will probably, it's been giving a lot of disinflation to the effort, and probably that declines over time, but it may well have some more time to run. The supply chains are not perfectly back to where they were. In addition, it takes time for the healing process to get into prices. So there may be still a tailwind. We'll find out with that. So we look at the things that relate to our mandate very carefully, and as you would imagine.
I guess just as a quick follow-up, do you feel comfortable at this point saying the economy has reached a soft landing, or is that part of looking for more confidence?
No, I wouldn't say we've achieved that, and I think we have a ways to go. Inflation is still, core inflation is still well above target on a 12-month basis. 12 months is our target. Certainly, I'm encouraged, and we're encouraged by the progress, but we're not declaring victory at all.
Progress. I think the prices just, they've somewhat stabilized. I'll give them that. At the pump, at least.
Thank you, Mr. Chairman. You've said that you would know the neutral rate by its works. So I'm wondering what you could tell me. How do you believe the neutral rate is working? We're telling you right now that growth is stronger. In other words, how much is the economy really being restrained right now by the current funds rate? And how much
Watching this
restraint does it
falling wedge
really
now here.
need additionally if inflation is still coming down?
So I think you
Hidden
do
bullish
see in
div
the
again.
interest-sensitive parts of the economy, you do see, for example, housing, you see the effects. You
You're
do.
looking for the hidden bullish div.
Your second question, though, really, I think is important, and that is a lot of this has come through, a lot of the disinflationary process has come through the healing of supply chains and also of the labor market. So you've seen that, that other set of factors is really different from other cycles.
There's the bounce
and has
here.
brought
We should be
that
getting a
working
bounce. There it
with
is, look.
tighter policy,
Target's
which has enabled the
43,898.
supply side to recover. I think is that mixture has been behind what has enabled this. So no, we really do think that we're having an effect broadly across the economy. I would point to the interest-sensitive parts of the economy as well as spending generally. But it's a joint story. It's a complicated story.
But how much restraint are you actually imparting to the economy, would you say, relative to the neutral rate?
So I think it's of course, you know that it's not something you can identify with any precision. But a standard approach would be to take the nominal rate, 5.3%, let's say, and subtract sort of a forward measure of inflation. If you do that, and there are many, many ways to calculate the neutral rate, but that's one I like to do. And you're going to get to something that is materially above mainstream estimates of neutrality, of the neutral rate. You will. But at the same time, you look at the economy and you say, this is an economy that grew 3.1% last year. And you say, what does that tell you about the neutral rate? What's happening, though, is the supply side has been recovering in the middle of this. So that won't go on forever. So a lot of the growth we're seeing it isn't just a tug of war between interest rates and demand. You're getting, more activity because of labor market healing and supply chains healing. So I think the question is, when that peters out, I think the restriction will show up probably more sharply.
Thank you, sorry. Thanks for taking the question, Mr. Chairman. You mentioned earlier we're not seeking a weaker labor market, I think you said. Can you talk a little bit more about that? Do you think the labor market now is back to quote-unquote normal, and that we can achieve the inflation target without wage gains coming back down to what they were pre-pandemic? Even with today's ECI levels, they were still above those pre-pandemic levels.
I think the labor market, by many measures, is at or nearing normal, but not totally back to normal. And you pointed to one or more of them. So I think job openings are not quite back to where they were. Wage increases rather are not quite back to where they would need to be in the longer run. I would look at it this way, though. The economy is broadly normalizing, and so is the labor market. And that process will probably take some time. So wage setting is something that happens. It's probably will take a couple of years to get all the way back, and that's okay. That's okay. But we do see. You saw today's ECI reading. The evidence is that that wage increases are still at a healthy level, very healthy level, but they're gradually moving back to levels that would be more associated, given assumptions about productivity.
This hidden bullish should
are more
play out to
typically
the
associated
upside.
with 2% inflation.
90% of the time, that's going to play out.
It's an ongoing process, a healthy one, and I think we're moving in the right direction.
So that process
there it
can
goes.
continue without a weakening of the labor market, basically.
Just
you're
trade
saying.
what you're
I think
supposed to trade.
The labor market is.
Don't use your emotions.
I don't know if it's rebalancing. Clearly, there was a fairly severe imbalance between demand for workers and supply at the beginning of the pandemic. So we lost several million
PayPal
workers at
just
the beginning
lay off
of the
2,500
pandemic
people?
from people dropping out of the labor force. And then when the economy reopened, you remember 2021, you had a severe labor shortage, and it was everywhere. Panic on the part of businesses, couldn't find people. So what's happened is we expected the labor market to come back quickly, and it didn't. And 2022 was a disappointing year. And, we were kind of thinking, well, maybe we won't get it back. And then 2023, we did, as you know. So labor force participation came back strongly in 23, and so did immigration. Immigration came to a halt during the pandemic. So those two forces have significantly lowered the temperature in the labor market to will is still a very strong labor market. It's still a good labor market for wages and for finding a job, but it's getting back into balance And that's what we want to see. And, one great way to look at that is what's happening with wage increases. And you see it now across the major things that we track. It isn't every quarter, but overall, there's a clear trend, still at high levels, but back down to
that's
where
a pop.
would be
43,294
consistent with
that's how
where
you
we
make
were before
gains
the pandemic
in a
and
small
with
day.
2% inflation.
Chris.
Hi, Chris Rugaber at Associated Press. Thank you. I wanted to follow up on Rich's question. It sounded like you suggested that you're not worried about faster growth so much. So wanted to see if you're seeing anything that suggests that inflation could reaccelerate from here. And it sounds like you're saying you're not worried that solid growth from here on out poses any risk to inflation. Thank you.
No, I think that is a risk, the risk that inflation would reaccelerate. I think the greater risk is that it would stabilize at a level meaningfully above 2%. That's to me more likely. Of course, if inflation were to surprise by moving back up, we would have to respond to that, and that would be a surprise at this point. But I have to tell you, that's why we keep our options open.
See the cup and
why
handle?
we're not rushing.
Bang.
So
43,455.
I think both of those are risks, but I think the more
Looks
likely
likely.
risk is
Pop.
the one that I mentioned, which is
Sammy, cup and handy
you've had
to the
6
upside.
good months, very good months. But
Let's see this cup and
what's
handle
really going to
blast.
shake out
Watch it.
here?
Watch this thing blast.
When we look back, what will we see? Will inflation have dipped and then come back up? Are the last 6 months flattered by?
If you see the cup and handle, write cup and handle in the comments.
One-off factors that won't repeat themselves. We don't think so. We don't. That's not what we think. But that's the question we are asking. We have to ask, and we want to get comfort on that.
And just one quick follow-up. Governor Waller had mentioned the revisions that are coming on February 9th for the CPI data. Is that something you're watching as well? And if we see those revisions fairly minor, is that going to give you more confidence where things are going?
We'll just have to see.
Boom, look at that
we'll
cup
look
and
at
handle
those.
so far, so
Last
good.
year was
Come
was
on,
a-
baby. Blow on
a
it.
surprise.
Michael McKee, Bloomberg Radio and Television. If you don't want to use the term soft landing, would you say at least that from your point of view
This
now,
guy doesn't trust him at all.
other scenario of a hard landing caused by the Fed is off the table or the risks have diminished very much? And you mentioned below 2% inflation on a 3-month basis. Core PCE has been running at 1.5%. And there are those on Wall Street who think that if you maintain the level of restriction you have right now, you could end up with inflation running below your target. How do you see that?
So your first question, how to describe where we are. So I guess I would just say this.
Be head and shoulder.
Executive summary would be that growth is solid to strong over the course of last year. The labor market, 3.7% unemployment, indicates that the labor market is strong. We've had just about 2 years now of unemployment under 4%. That hasn't happened in 50 years, so it's a good labor market. And we've seen inflation come down. We've talked about that.
Resistance 43,360.
6 months of good inflation data and an expectation that there's more to come. So this is a good
We got the
situation.
pop, we didn't get the
Let's be
fall.
honest. This is a good economy. But what's the outlook? That's looking in the review. The outlook, we do expect growth to moderate. Of course, we have expected it for some time, and it hasn't happened. But we do expect that it will
the cup and handle
moderate as supply chain and
comes
labor
back.
market normalization runs its course. The labor market is rebalancing, as I mentioned. Job creation has slowed. The base of job growth has narrowed. And of course, 12-month inflation is above target and getting down closer to target. It's not guaranteed, but we do seem to be getting on track for that. So those are the risks and questions we have to answer. But overall, this is a pretty good picture. It is a good picture. Your second question was, sorry.
Could you get inflation that is below target, end up with inflation below target, and you have to do something about that?
So the thing is, we're not looking for inflation to tap the 2% base once. We're looking for it to settle out over time at 2%.
Cup and handle comes through so far.
The same thing is true. If we have a month or two of lower, and we have that now, of inflation that's annualized at a lower level, that wouldn't be good. We're not looking to have inflation anchor below 2%. We're looking to have it anchor at 2%. So if we do face those circumstances, then we'll have to deal with that. I think as of now, the question, which we want to take advantage of this situation and finish the job on inflation while keeping the labor market strong.
Edward. Edward Lawrence from Fox Business. Thank you, Mr. Chairman, for taking this. So as I've heard from some district Fed presidents, is it, in your view, a little premature to think that rate cuts are right around the corner? And then when we do see that first rate cut, should we interpret that as the beginning of a rate cut cycle, or is it a one-off?
So I'll point to that language on your first question. We included that language in the statement to signal
nice little pump,
clearly
though. Kind of a good cover handle with double top,
strong
right?
growth,
Couldn't get above
strong
the
labor
resistance.
market, inflation coming down, the committee intends to move carefully as we consider when to begin to dial back the restrictive stance that we have in place. So if you take that to the current context, we're going to be data dependent. We're going to be looking at this meeting by meeting.
The hidden bullish.
Based on the meeting today, I would tell you
rare.
that I don't think it's likely that the committee will reach a level of confidence by the time of the March meeting to identify March as the time to do that, but that's to be seen. So I wouldn't call, when you ask me about in the near term,
Right.
I'm hearing that as March. I would say I don't think it's probably not the most likely case or what we would call the base case. Then your second question is
Is this the start of when we see a cut, is it the start of a cutting cycle, or could it just be a one-off?
That's going to depend on the data. The whole thing is this is going to depend on the data. We're going to be looking at the economic data as it affects the outlook and the balance of risks, and we're going to make our decisions based on that. And it could wind up, we'll have another SEP at the March meeting, and people will write down what they think. But in the end, it's really going to depend on how the economy evolves. We talked about there are risks that would cause us to go slower. For example, stronger inflation, more persistent inflation. There are risks that would cause us to, or if they happened, that would cause us to go faster and sooner, and that would be a weakening in the labor market, or for that matter, very, very persuasive lower inflation. Those are the kinds of things. So we're just going to be reacting to the data. That's really the only way we can do this.
Victoria. Hi, Victoria Guido with Politico. Could you talk a little bit more about productivity growth? You've mentioned multiple times about, the level of wage growth that's consistent with 2% inflation. We've obviously seen, you were talking about ECI this morning, in which it's cooled a little bit, but still sort of above what you wanted to see. Growth has been very strong. How much of those numbers do you attribute to productivity, and do you see that productivity as sort of just temporary because of the factors, the labor and supply chain factors you were talking about, or do you think that productivity growth will fade over time?
So this is a really interesting question, and I think my own view is, I think if you look back to the pandemic, you saw a spike in productivity as workers were laid off and activity didn't decline as fast.
This trend line must hold tonight.
Deep trough of productivity.
To get us to 46.
And then over the last, you saw high productivity last year in 23.
What's going to happen tonight,
I think we're
today.
basically in the throes of getting through the pandemic economy. And the question will be, what is it that has changed? The productivity tends to be based on, fundamental aspects of our economy. Is there a case, will it be the case that we come out of this more productive, more on a sustained basis? And I don't know. What would it take? It would take, people talk about AI, but my guess is that we may shake out and be back where we were, because I'm not sure I see work from home doesn't seem like it's a big productivity increaser. AI, artificial intelligence, generative may be, but probably not in the short run, probably maybe in the longer run. So I'm not seeing why it would, but right now, I would say the productivity is kind of what falls out of the broader forces that are driving people in and out of the labor force and activity returning and supply chains getting fixed.
Right, so would that be behind why we've seen such strong growth, but we've also seen inflation fall, that maybe there's just a higher level of productivity
That's
right
one
now?
way to look at it, yeah.
Nancy.
Hi, Chair Powell. Nancy
Let them answer their own
Marshall-Genzer
question.
with Marketplace. I want to ask a little bit more
Gotta learn from
about
the guy.
housing. I'm wondering, how closely are you watching rent and housing prices as you evaluate whether and when to cut rates? And it seems like housing prices are not coming down as quickly as you expected.
Why would housing prices go down?
So
They
when we
keep printing
think
money.
about, our statutory goals are maximum employment and price stability, and that's what we're targeting. We're not targeting housing price inflation, the cost of housing, or any of those things. Those are very important things for people's lives, but they're not, those are not the things we're targeting. We're also well aware that when we cut rates at the beginning of the pandemic, for example, the housing industry was helped more than any other industry. And when we raise rates, the housing industry can be hurt because it's a very interest-sensitive sector. On top of that, we have longer run problems with the availability of housing. We have a built-up set of cities, and people are moving further and further out. So there hasn't been enough housing built, and these are not things that we have any tools to address. But where it comes into play very specifically in our work is inflation, which is a combination. It's really rental inflation. You're taking owner's equivalent rent and then actual rent paid by tenants, and you're running that through the CPI calculation or the PCE calculation, the one we look at. And what that's telling you is that market rents are increasing at a much lower rate or even being flat, and that will show up in inflation over time. It has to, as long as that remains the case. So.
And just real quick, what is your response to the letter that was sent to you by some members of Congress asking the Fed to lower interest rates to make housing more affordable?
My response is what I started with, which is that our job, the job Congress has given us, is price stability and maximum employment. Price stability is absolutely essential for people's lives, most importantly, mostly for people at the lower end of the income spectrum who are living at the edges, at the margins. And so for someone like that, high inflation, in the necessities of life, right away you're in trouble. Whereas even middle-class people have some scope to absorb higher costs. So we have to it's our job, it's what society has asked us to do, is to get inflation down. And the tools that we use to do it are interest rates. So that's how we think about that.
Courtney.
Courtney Brown from Axios. Can you give us some insight into whether the committee discussed the possibility of slowing balance sheet runoff in the months ahead?
Yes. So I would start by saying that balance sheet runoff so far has gone very well. And as the process has continued, we're getting to that time where questions are beginning to come into greater focus about the pace of runoff and all that. So at this meeting, we did have some discussion of the balance sheet, and we're planning to begin in-depth discussions of balance sheet issues at our next meeting in March. So those questions are all coming into scope now, and we're focusing on them. But we're at the beginning of that process, I would say.
Quick follow-up. Is it the case that the Fed would decide to lower rates and make adjustments to the balance sheet runoff in tandem?
Yes, we do. We see those as independent tools, and so they don't. For example, if you're normalizing policy, you might be reducing rates but continuing to run off the balance sheet. In both cases, that's normalization. But from a strict monetary policy standpoint, you could say we're loosening in one with tightening. So that could happen. It's not something we're planning or thinking about, but right now we're thinking about getting to a place where we're going to see the balance sheet runoff to continue. We're watching it carefully, and as I said, we'll be looking into that as a committee starting in March.
Thanks.
Simon Urbanovich with The Economist. Thank you, Chair Powell. You've mentioned 6 good months of inflation data, but that not being enough to build up confidence. Based on your previous response that your base case is you probably wouldn't start easing yet in March, the implication is that 8 good months might not be enough either. Roughly how many months do you think you might need of good inflation data to be confident?
Yeah, I'm not in a position to put a number on it. I'm just going to say,
can't tell you that.
And it's not that we don't have any confidence. We have growing confidence, but not to the point where we feel like it's a highly consequential decision to start the process of dialing back on restriction. And
Looks
we want
like
to
a
get
short
that
down
right.
to
And we feel
42,
like the strong
250 is the
economy, strong
case.
labor market, inflation coming down, it gives us the ability to do that. We think that's the best way we can serve the public, because ultimately, we've made a lot of progress on inflation. We just want to make sure that we do get the job done in a sustainable way. That's how we're thinking about it. In terms of when that'll be, that'll all come out of our communications, and we won't keep that a secret.
Pointless question, because you knew you weren't going to get an answer
Hi,
to
Chair
that.
Powell.
So why
Evan
ask
Weiser
it?
with M&I Market News.
But I guess that's the
Can
same for
you,
all the questions.
Explain a little bit more on what you're considering when tapering QT. Do you need to see the overnight reverse repo facility all the way down to zero? Or is
Repo-
it something that you can start
They don't want
with
to
a
talk about
couple $100
repo.
billion there?
He won't get into that. Watch
Not a
this.
decision that we've made, but I wouldn't think we wouldn't be taking a position that it's got to go to zero. I mean, if it were to stabilize at a different level, but that's not a decision that we've made. That's what we'll be talking about at the March meeting. A whole range of issues will be briefed up, and the committee will get into all of the issues.
Tons of
that
people
will
are
be
getting
arising
wrecked
over the
either way
course of
right
the
now.
next, let's say,
Not smart
year
to
or
be
so.
traded, in my humble opinion.
Great.
But people do what they want.
Thanks, Greg Robb from Market Watch. Chair Powell, I want to change gears a little bit. In the presidential primary campaign that's been going on for the last 9 months or so, your name has come up often, and many Republican candidates had said that they probably wouldn't want to give you a third term. So I wanted to give you a chance to talk about that. Do you want another term? You've had on the Fed. What's your stance on that?
I don't think he wants to
I don't
answer
have a
it.
stance on that. It's
Who's
not
that?
something I'm focused on. Focused on doing our jobs. This year is going to be a highly consequential year for the Fed and for monetary policy, and we're all of us very buckled down, focused on doing our jobs.
Do your job.
Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. As you mentioned, core PCE has been
Some new
running at
people here today.
1.9% over the past 6 months. And you guys are actually expecting core inflation higher this year at 2.4% compared to that 6-month measure. Given that forecast and that the median is for 3 rate cuts this year, what happens if inflation stays where it's been over the last 6 months for the next 6 months?
So we'll update our inflation forecasts at the next meeting. You referred to the December meeting. That's 3 months old, so it might be lower now given the data we've gotten. So look, as I mentioned, we're going to be reacting to the data. If we get very strong inflation data and it kicks back up, then we'll go slower or later or both. If we got really good inflation data soon, that would matter for both that would tell us that we could go sooner and perhaps go faster. So we're just going to be, but of course we'll weigh that with all the other factors. We're setting policy based on the totality of the data.
But just to follow, if inflation stays where it is currently, that would probably mean that the real interest rate becomes more restrictive. Would that mean you'd have to trim more, perhaps, than you already have factored in?
Well, I think if we came to the view that that inflation that the 6-month inflation numbers, which are very close to 2, were in PCE world, if we came to if we thought that is really where we're going to be, then yes, our policy would be in a different place. It would. But that's the whole point, is we're trying to get comfortable and gain confidence that inflation is on a sustainable path down to 2% or toward 2%.
Daniel.
Hi, Chair Powell. Daniel Davis, Agence France-Presse. I just wondered if I could get your comment on the recent consumer confidence data. It seems to suggest that consumers are sort of moving towards a much more optimistic view of the economy. I just wonder, is it fair to say that they're moving towards where the Fed appears to have been in recent months? And do you think that inflation and falling inflation perhaps has played a role in that? And what challenges do you see going forward? Thank you.
Yeah, so it's been interesting that confidence surveys have been weak at a time when unemployment has been low, very low, historically low for a couple of years. But nonetheless, that's been the case, and we've asked ourselves why that is. And one obvious answer, we don't pretend to have perfect wisdom on this, but one obvious answer is that the price level is high. So prices went up much more than 2% per year for a couple of years, and people are going to the store and they're paying much more for the basics of life than they were 2 years ago, 3 years ago.
Definitely.
And they're not happy about it. And it's fine that inflation's coming down, but the prices they're paying are still high. So that is what, that has to be some part of why people are unhappy, and they're right to be unhappy. You know, this is why we need to keep price stability. It's why we need to do our jobs, is so that people don't have to deal with things like this. In terms of you're right. In recent surveys, you've seen a couple of significant increases in consumer confidence or happiness with the economy. I guess that's a good thing. That can support spending, can support economic activity. There's some evidence of that. But you're right, it is a fact that we have seen a meaningful increase. I think levels of confidence are still maybe not as high as they've been at various times, but they certainly have come up.
Thank you for taking our questions. Brian Menace, CNN Business. Committee members have said they'd like to meet with business leaders and stakeholders in person to learn more about the economy in real time, given that some data are subject to large revisions, the issue of seasonal adjustments being thrown off balance, and many readings of the economy being quarterly. So did any members say they've learned anything not yet reflected in the data, or have you yourself learned anything through anecdotal evidence that hasn't been captured in the data yet?
Well, yes. I'm a big believer that yes. So we do meet with outside groups who come from all different parts of the economy, and I always feel like I spent most of my life in the private sector looking at companies, individual management teams, and then building out from that. And so starting with GDP data and working into what's actually affecting people's lives is challenging. It's very hard. So I really like anecdotal data. In addition, as you know, the 12 reserve banks have really the best network of anyone. That in all their districts, they're talking to, not just the business community, but the educational, medical, nonprofit community. They have arms into all of that. And so when they come back, that's what goes into the beige book. But that they come back, and what each reserve bank president does is, during the Outlook go-around, they'll say, in my district, and they'll talk about 100 conversations. They won't talk up. They will give you.
Oh, he's rambling today, yo.
Conversations that they've had with.
He had his Adderall this morning. He's going in.
Yeah, I personally find it very helpful in understanding what's going on, and also I think you hear things before they show up in the data sometimes.
Did any of them notice slowing economy based on what they've heard from their district?
Yes, I mean, if you look back at the last, not this beige book, but the one before, there was a lot of slower activity. I think that what you're hearing now is things are picking up a bit. You're hearing, not in every district, and not every person that we talk to, but you're overall, it feels like you're hearing things picking up at the margin. So that's what comes through.
Go to Jeff Cox.
Thank you, sir. Jeff Cox from CNBC.com. Just kind of looking to put it all together. You talked about basically the economy looking strong with 3.3% annualized growth in the fourth quarter. Does the strength of the economy speak more loudly to you now than any inflation threat might? That you're in a position, in other words, to keep rates elevated as long as the economy stays strong, and you're more tilted towards that. And then also, perhaps, are you worried at all that the economy is maybe a little too strong right now, and that inflation could come back at some point?
I'm not so worried about that. It's don't be worried. Again, we've had inflation come down without.
It's a likely short to 42.259. I'm not saying it's guaranteed, but it's likely.
Important increases in unemployment.
We got some liquidity below us.
We should want to get in the way of that process if it's going to continue. So
right there at the exact place.
I think declining inflation,
it's a bear flag.
Continued declines in inflation. Are really the main thing we're looking at. Of course,
you trade that bullishly, wouldn't you? So why would you trade it bearish?
We don't have a growth mandate. We've got a maximum employment mandate and a price stability mandate, and those are the two things we look at. Growth only matters to the extent it influences our achievement of those two mandates. Thank you very much.
That's it. This is a nothing burger, everybody, and we don't have another meeting for 40 days. I'm actually pretty happy with what went on here. I mean, we didn't get hit too hard. A lot of chop for Bitcoin. Bitcoin took a bit of a beat down. I'm going to finish this off with kind of where I see Bitcoin, right? I need it for myself. A lot went on right now. We just kind of have to process it, right? So I always process the meeting in my mind here for a second, and I look at the chart blankly by itself, fresh, no moving averages. We're going to start fresh. We did pretty good. I see a bear flag right now, likely breaking to the downside, regardless of what's happening there. It looked like it's happening as we speak. It's already in the money if you entered it there with a stop on the other side, but you never know. I'm not saying it's guaranteed, but it does look pretty bearish. Look, that was kind of a shoulder, a head, a right shoulder, broke the neckline and collapsed. 30-second chats, dude, 30-second chats. All right, so we'll get off these small time frames. We'll double click, and we're going to look at Bitcoin in all its entirety. I couldn't move this. I don't know why this wouldn't let me move it, and I was like very annoyed by that. Now it doesn't let me move it now either. Very strange. Let's see here. See, somehow I decided it was just going to put my, and then not let me move it too. Anyway. Hopefully it doesn't revert back to that. Okay, cool. I was like, I've seen TradingView do some funny things. All right, let's take a look at where we stand, what's happening right now. No moving averages, just, ready to go. So look, boom, 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 boom. All right. So here we go. Remember, whenever things get bearish and you're acting crazy and you're freaking out, take a deep breath and ask yourself what's happening. Okay? Number one. Right here, we're not closing a weekly candle. Until we close a weekly candle above 41,360, you have no reason to be really super bearish. So no matter who's telling you anything about where we're going or when we're dumping, stop listening to 100,000 people. Twitter, YouTube, it's your friend, your family members, people you know. Oh, this guy that's a big... This will happen. A friend will call. I know a baller, man. He's like a whale, and he told me that they're moving tomorrow. Like, a bunch of money's getting moved tomorrow. Like, they're going to do it. Like, that's how, people have done that to me, and I've, like, sold. Like, don't listen to it, And again, I'm not a financial advisor. Nothing I say to you, you're taking financial advice, but listen to the charts. Men lie, women lie, the charts don't lie. This tells you that we could get all the way to 63,000, and we could get there by April 8th, April 9th. All right? That's what it says. Not saying it's guaranteed, but boop, boop, boop. Elliot, 1, 2, 3. As long as the weekly never closes below this level, we're good to go. We are good to go. So I just want you to, to be, stuck on that idea. Okay? Sad. Joey Stream is just taking a beat down. It has an Adam and Eve double top right now. That looks like it's going to go lower, We won this morning. Give us a chance at some easy scalps, love of the lifer. We won this morning because I trade on liquidity, right? And those are good liquidity times. Right now, you're going to have less liquidity. I mean, the meeting just ended. People were just like, a lot of people got wrecked today, man. All right? A lot of people got wrecked. So weekly still looks good to us. Like, you can't complain about the weekly, all right? So just keep that in your back pocket. The weekly looks amazing. And until the weekly candle closes below 41,360, we have nothing to truly stress about if you're like a bull, right? If you want to make good money bearishly, that's what you want. If you're looking for lower prices, you're looking for that weekly candle to close. That's the beginning of lower prices for you. If you don't get it, you're likely not going to get lower prices. Bitcoin tends not to give people what they want. A lot of people waited on the sidelines to get into Bitcoin. And they waited a little too long, all right? This is your daily support of resistance. The daily wick tier, the 5-day keeps that same area. And so if the daily stays above 38,005, like you're in a pretty good shape too. All right? I know people past week who lost their crypto. Get your crypto on cold storage immediately. Thank you for saying that. Get your crypto on a hardware wallet, everybody. Don't play games. And again, so the 5-day chart broke out. Like, that's what we're looking at. And now we're going to keep zooming in. This is what I do. And the 3-day chart looks super bullish with a breakout. We'll see where this 3-day candle closes, 2 days and 4 hours. Right now it's, it's an indecision doji. 2-day candle one day and our daily today, right? Look, 333, of course, right? We close in 3 hours and 33 minutes. Every time, everything I do is on the 333, like every time. Just ordered a tangent. Yeah, get yourself a tangent. They're awesome. When that ring comes out, that's going to be ridiculous. Just walk around with like $1 million on my finger. Someone's going to cut my finger off, man. That's the same thing as the ring doesn't matter. It's the seed phrase, right? So. And here we are on that daily. And then, oh yeah, we went to this. This is why I had this set up. And, for the ICT students, people that are, really into ICT and have been studying it, I know some of you are here. We're going to talk about something here on the 1 hour that's beautiful, right? But resistance, daily resistance yesterday. Now we're in indecision doji. All right. And we have beautiful support for Bitcoin right here. And again, that's kind of the weekly. So can we hang? It says we can continue to the upside, but we're getting overbought on the stochastics RSI as well. 6 hours reset, pretty nice. The 8 hours tending to reset. And this is where the whole game begins. The 8 hour broke above the 200. That's when I made my more bullish call there, right? Then we went sideways. This trade has been like sideways, up and down. The key is, can the 8 hour continue to go sideways and stay above the 200 while we get tight moving averages? And can we get a golden cross on the 8 hour time frame without losing this POC, without going lower? There's a chance it happens. It's looking pretty good, but it may take, we may go sideways for a few more days here. I could see this go all the way like this, and that could be, 1, 2, 3, 4, 5, 6, 8 hour candles. That could take 48 hours, right? It could take 2 days. So we may go sideways for a couple days. Usually after a Fed meeting, the whole market kind of like, I don't know. It's like we waited on it. Remember, I reminded us of this meeting for so long. What I'm really bullish on too is the 48 days now. Like we have a good amount of time to the next big meeting. It's a really good sign, in my humble opinion, right? And so we move on to March. But why is it? So March 20th will be our next meeting. We have the whole month of February off. February is traditionally a bullish month for Bitcoin, right? And we can kind of look at that. I looked at that in the Discord, and you can see kind of month by month for Bitcoin. You can even at Chat GPT for that stuff, and it will give it to you. And if you look at the month by month for Bitcoin, and you look at the month of February, right? 2022, we were up 12% on the, flat last year, but we had a pretty bullish year. So, but we were flat for Bitcoin. Altcoins actually had a pretty good run January and February, if you remember. 2021, a huge move, 36%. 2020, which was a halving year, we were down. The halving was coming, There was a lot happening here, all right? And look, March, and then we rebounded. Look how much we rebounded in April. April was a great month for Bitcoin. Notoriously, massive gains in general, right? But then 2017, we were up, that bull run, as we went into the bull run. 2016, 2018, 2017, back in 2014, 2013 up, But most of the time, it's green. You see, it had 1, 2, 3 red years and a flat year. Every other year, it was green. All right? And that's in, a 12-year period. So 75% of the time. But again, I'm not saying anything's a guarantee. We're just... Here we go. January, we lost 1% already this year for Bitcoin. But last year, wow, it was a behemoth month. One of the biggest months for Bitcoin really ever. January, notoriously, okay month. And I always want to look at the halving years, right? And see. But April and May are usually great because the halving usually comes. And so, you can see that. June's a little struggle. July's a great month. I'll tell you what, I dread September. We actually had a good September this year compared to most. And it was by all coins, and a few things helped us through. October's a beautiful Pumptober, right? And November, Moon November, and the Santa rally. Like, we got our beautiful 3 months, just like we got our 2020. These are bear market times, bear market times, bear market times. You can see these are, like next year we should have a beautiful 3 months there, October, November, December. Remember, there'll be gains coming. Start to understand where you are on the bigger cycle too, right? The October effect, sell in May and go away. Really sad, JoyStream, one of my bigger holders, just getting absolutely bashed. Still a lot higher from the very lows, I have to say, but getting completely annihilated today. One of the bigger losers recently, right? So, not a fan of that. So, notoriously a pretty bullish month, just to kind of look at things as we head into February. So, the 8-hour must stay above the 200. The second the 8-hour closes below this, I will begin to become bearish. And I'll start to open up shorts, and I'll be trading more short. And I'll be trading the short gap. That comes back right. Show me the gap in the VRVP that I just had. Basically, this gap here, though, down to this area, 39.8. So we lose this, I'm shorting down to 39.8. Very simple. If we lose the 200 SMA in the 8-hour time frame. Right now, it looks like we may. It doesn't look amazing, right? 6-hour bearish engulfing. And this brings me to the 4. And you can see this very strange bit of chop today that we're in. Am I live right now? I didn't even know. Like, I'm like always live to the point where I'm like, am I live right now? Am I live? I am, right? I thought I was doing like a class the way it's, because I don't have the music on and I'm just like in the zone. I'm live, right? My best winner today is GFAL Bag. In fact, the only one that's up. I know Influencer sold his Joy Bag and the Joy team is being criticized. Dang, man. Karate doing well with the flag. You are alive and well, Sam. Chris Crypto Life. Yes, yes. So we are still forming a bit of an ascending triangle for Bitcoin. Could still be a shoulder ahead, and that could be the little right shoulder for the dump, though. I've seen that. And we could roll over. 1 hour says we roll over, so that's a go. That's basically an M pattern right there with a dumpage. But we still have that hidden bullish. We do have a trend line. So this is what I'm watching right now, and it's not amazing. And the 1 hour is curving viciously to the downside. If I saw that as a long, I would take it. But the 1 hour looks like it desperately wants to dump on us. Doesn't look good at all. And you're looking for kind of some sideways price action here. And then we could get all the way up to probably 46,379. Okay. I'm not saying that's for sure. We have a pretty good support and resistance level here. Now, how would you short? Well, let's look for the 15,200. We've lost that. Let's look for our 7. We pretty much, we're playing with that. So that's the beginning of bearishness. Losing the 200 SMAs on the 15 and the 7. But I don't see a lot of follow through, and the stochastic's pretty low. I wouldn't be surprised if we just go through some chop here. You'd look for price action to come down to this 200 SMA on the 1 hour time frame. If you lose that, then you're shorting down to 39.9. All right. So if we close a candle below the, someone could take a short now. I just feel like in my humble opinion, the charts are conveying to me, who cares what I feel, that we're going to go sideways, and then I'll be able to make another assessment later on. So I would watch this ascending triangle in the 1 hour time frame for Bitcoin. It took me, 30 minutes to do that, right? Ever since Jerome Powell started, I don't know, 20 minutes. And that's how my mind works. I start at the beginning, and I can do this, I'll do this tomorrow morning. I'll do it tomorrow night. And things change, and things change. It all kind of affects each other, right? I'm still seeing this as a complex inverted head and shoulder. Nothing's really changed my mind here that this is going to gap through and likely get up to 46.8, 47,000. But only time will tell. We're above the point of control. We're likely to bounce all the way up through the VRVP. You see that? If we lose the point of control, and that's why if we lose the 1 hour 200 SMA, I'll short us down here. And that will coincide with the 8 hour too. And so I'm going to be using the 8 hour and the 1 hour in conjunction mainly for the next couple of days to get through this period. And then you know what's crazy is now I realize why different time frames work at different times. And there's just different indications that the bots are going to be using, and I can pick up on that, right? And that's a new nuance that I started. My brain actually just flipped that and did the math for me and said, oh, wow. And I just figured that out in the last couple of weeks. So if you keep trading, more will be revealed to you. Like there's more inside of the depthness of trading that's going to be shown to you. It's pretty crazy. So, get excited because it's a never ending journey, this trading journey. And there's so much coming your way. And so always look for the opportunity. Always believe in the opportunity. Always put your best foot forward and, pay attention to what's in front of us. There's so much opportunity coming our way. But if you stay in the downside and you don't believe there's opportunity, then you'll miss a lot, right? Sam, love listening to your live shows. Elizabeth, we love you. We appreciate you. BOOKMAP says it's coming down to at least 42,160. Let's take a look at BOOKMAP before we jump on out of here for the day. And yeah, it does. I mean, 42 right here, right? 42.90, 41.99, even possibly all the way to 40,600. They're building some liquidity down there. They got us above there too. We're kind of jammed, but the biggest, closest liquidity right now. And wow, they've been moving liquidity all day, right? There was heavy liquidity here. Then there was liquidity upside. Then there was down. Then there was this. Then there was right here. Then there was right there. One of the faster days of moving that I've seen for liquidity on BOOKMAP. One thing I will tell you that I find interesting, which usually is a good sign for a pump, is we're looking at the bots. Like I always keep whale alerts here inside. I have whale alerts. I have 3 amazing bots that work very hard. Exchange announcements, whale alerts. Like Jupe's getting listed everywhere, right? Zed is another thing that keeps getting listed. We knew, so you learn about new coins through us. Zed is brand new. What is Zeta? Let me find out. So, Solidus AI Tech is on Huobi now. Chlor AI got on BitGet, right? So they're just like, just keep your eyes open. There's things going down and things happening right now, right? And then if you go to the whale alerts, look, 34,000 Bitcoin transferred from an unknown wallet to an unknown wallet. Not just moving around, but look, 35,000 Bitcoin, unknown wallet to unknown. It sounds like custody, but it also could be OTC. It could just be one exchange moving it to another, someone buying $1.5 billion worth of Bitcoin, right? To me, I believe it's ETFs loading up on BTC on this dip. That's what I believe is happening. XRP transferred from Binance to an unknown wallet. Look, 1,200 Bitcoin transferred from Coinbase to Coinbase Institutional. 1,200 Bitcoin transferred from Coinbase Institutional to an unknown wallet. 49 Bitcoin transferred from Binance to Kraken. 1,200 Bitcoin transferred from Coinbase Institutional to an unknown wallet. So at around 11 today and through 1 o'clock, we've just been seeing massive amounts of Bitcoin being moved, mainly off the exchanges onto unknown wallets. First to Coinbase Institutional, and then from Coinbase Institutional off to wallets. Someone transferred unknown wallet to Binance, some Solana. They transferred some Ethereum to Binance. Again, 1,400 Bitcoin today at 11:19. So between 11 and 1, there's just massive amounts of Bitcoin being moved. And we get that information for you in the trading. I think that alone is worth some coin, $3 a day. I mean, it's amazing what we have in the 99 provided for you every single day. Everyone, I'm going to take a break from the charts, step away, let my mind get limber. But yeah, I do see some more downside. At the end of the day, what we were looking at when what was all said and done was we were watching the small time frame here, and we were showing you that the 30-second chart wanted to break to the downside, right? And we had this bear flag drawn. And so far it's dumping, but there's a chance it holds now. I'll be honest, I see chop. I just see chop for Bitcoin sideways. I'd get out of the small time frame for now. They're fun when you need them. But you got to know when to turn them on and off too. You got to know when to use them. They're used for heavy volatility and a lot of volume. The second that happens, you want to step away from them because then they're going to suck you in and get you hurt. But the thing is, I never knew that either. That took years. To understand how to use those small time frames took a long time. It doesn't just happen overnight. You don't just start using it, It's something you transition to, okay? Everybody, I appreciate you. I love you. I thank you. And I'd be looking for this. This is the most likely scenario. Some sideways chop for Bitcoin. We'll fill through this ascending triangle, and then we'll go from there, and we'll see where we're at. I love you. I appreciate you. And you've been awesome, every one of you. It's been a blessing to be with you twice today. Like, the fact that I got to be here again, unbelievable. You were awesome. We had laughs. We had fun. Chair Powell did his thing. He danced around. It's been amazing. Great spending most of the day with you, Sam, and all of the lifers. Thanks for everyone here, and I hope you're learning so much, and I hope you're gaining more information. And again, we're winning trades consistently, even in some of the most insane market. Like, this is the most volatile market in the world, the highest risk with the most volatility, the ups and downs, and we're smoothly just using TA, nice and easy, and we're watching millions of people getting liquidated every day, and we're not. Like, if you just see people complain, oh, you made this little money. Just not, 90% of people are going to lose their entire leverage account. You get that? So every time, like, you compare yourself to some just small wins, or tell yourself, like, I still have my account. Like me, I still have the account. Like, I keep making money trading leverage. I don't lose it. Like, I use the same amount of money to produce. Maybe some days I produce less. Maybe some days I produce more. But I don't lose my kitty. And you have to remember, 90% of people are losing the whole thing. Liquidations for $4,000. They're putting more. Liquidations. By the time next thing they're down $20,000, they keep putting $4,000 or $5,000 back into the portfolio, right? So no more blowing on them candles today. Yeah. I am traded out for the day. I love each and every one of you, and but I'll be back in the trading group. And tonight I really scan coins now. Now I'm going to go hard. So the market kind of has time to breathe, and I'm going to start looking for the altcoin setups that matter, and we'll see if we get short or long tonight. So everyone, God bless you all. Thank you for jumping on in. And remember, BOOKMAP does have that liquidity to the downside. It doesn't look amazing for the bulls. So just be careful, be on your lookout, and I'll see you tomorrow for another beautiful live stream. God bless. To get the 99 membership, just go right here. We have a pinned comment. We make this very easy for you. Click here, cryptolifer.com. Takes you to the cryptolifer.com website that I created. Join today, all right? Jump on in. That's all you got to do. Super simple.